Welcome to Thought Leaders, featuring interviews with some of the best minds in the industry. Today's special guest is industry veteran and hybrid product expert, Butch Boley. Hello everyone, I'm Steve Savant, syndicated financial columnist and talk show host. In this segment, Butch and I are talking about how to purchase hybrid long-term care policies with life insurance. We're talking about the advantages and disadvantages of this type of hybrid product. Well, there's a lot of advantages, I have to say. There are a few drawbacks, and underwriting's one of them, as we all know. But still, all in all, pretty good idea. When we're looking at LTC combination with life insurance, it's a little different, than the annuity that we'll talk about tomorrow. So walk me through kind of the basics first.
Well, the big picture item, I think more importantly, is the tax-free death benefit if you happen to pass away before you trigger the long-term care benefit off of it. The underwriting is a little bit less lenient than a long-term care policy, but it's definitely not a slam dunk.
I assume that if you're decently healthy and you're getting a pretty good life insurance underwriting rate, you're getting a pretty good classification from your underwriting offer. I'm thinking, wow, that death benefit, that distance between the money that you put into it and the death benefit, that cost could actually pay for this if you actually had to ever have to make if you ever had to actually make payments to your medical or long-term care bills.
And I think the underwriting too with these products, it's black and white. There's no gray. You either get a policy, and you typically have knockout questions, and potentially you can know right there when you're meeting with the client whether they can get a policy or not.
Well, give me an example of maybe some of these underwriting or as you call them, knockout questions.
Sure. And some of these aren't going to surprise people. Oxygen use, obviously, heart conditions, uncontrolled blood pressure. Some of the other ones that take people by surprise a little bit are even some mental disorders like bipolar. With some of the companies, you will be declined for a policy if you've been treated for bipolar. Talk about some of the lifestyle issues. If you've had a DUI within the last 3 years.
That could be an issue.
Now, some companies take into account smokers or non-smokers. So even though you're a smoker, doesn't mean you're an automatic decline, but it could affect what's called the net amount at risk that the company's willing to take.
Okay, so the death benefit may be lower.
Correct.
But the benefit still is there as long as you can get past these knockout questions.
That's correct.
Okay, now, so I have triggers that are built inside these. Some are for the terminally ill or the chronically ill. But I'm looking at this, mostly it's you're unable to perform for 90 days 2 of the 6 ADLs, the activity of daily living.
Yeah, we're definitely getting away from that confinement rule, so to speak, and getting to the 2 of 6 ADLs.
Now, I noticed here also that the cognitive impairment, such as Alzheimer's, it used to be a kind of a no-no. And for long-term care, it's still okay from the standalone. But how about, I'm not really sure, how about this for the hybrid?
On the hybrids, definitely there's a chance for a decline there. But there's some policies that are looking at it.
Now, of course, we have eliminations, just like we've been talking about all week, elimination period. You're going to drop your morbidity costs inside a contract by taking a longer elimination period. So that's a good thing. And I've noticed that a lot of these contracts, they're not as long, 120, 180 days. It's more in this cycle of 60 to 100 days.
Correct.
What about the monthly LTC benefit, this calculation that we see down here? Can you walk me through that?
Yeah, most typically what you're going to do is you're going to give them a deposit. Let's say it's $100,000. Let's say it goes up to $250,000 as your new death benefit. You can then take 2% per month, up to, with one of the products we like the most, up to 2% per month out as an accelerated benefit. And they'll basically tell you at 2%, you're going to have a payment for about 50 months.
So once I figure out that payout percentage, I can then calculate my dollars per month. I'm going to put that into my overall benefit, and that'll tell me how long it's going to last.
That's correct.
Okay, if you've seen, what's the average here on your payout percentages and your payout lengths?
Usually between 2 and 3%, probably 40 to 50 months on your payout.
Okay. Now, let's talk about some of the issues. Now, again, we're back to the indemnification. Do I pay actual expenses, or are they just going to send me a check once I trigger the ADLs? Is life the same as the annuity?
Yes, it is.
So it's all going to be?
Indemnity.
Indemnity, okay. And then paying the policy, in many cases, a life insurance policy with an LTC benefit is funded by a single premium. Now, here's a little difference because usually we're talking people paying annual premiums. Nobody thinks about SPWL or SPUL. But this is an area where we see a lot of this. In fact, you have one carrier, you don't have to say their name, but maybe walk me through some of their provisions.
Yeah, one of their, they have 2 single premium life products like this. And if you have qualified money, one of the big drawbacks of doing a lump sum on qualified money or cashing it out is the big tax implication you have with that. So what they'll do is they'll take your qualified money, put it into a 5 or a 10-year single premium immediate annuity, which you're going to pay taxes on annually over that 5 or 10-year period. But it makes that a little bit easier.
You're losing the death benefit, right?
Correct.
And you're okay, and the client has to be okay with that.
Yeah, correct.
They have to be. So that's one way to smooth out the qualified taxable events.
That's correct.
Okay, but for traditional non-qualified, do we have any issues there at all?
Not a big deal. Nope.
Okay, so single premium, it can go in.
Yep.
Now, I pay my single premium. I'm going to have a death benefit that's going to be greater than what I put in.
Yep.
If I don't use the money, I get the death benefit at my death transferred to whoever my beneficiary is. Okay, but if I do use it, what happens to my death benefit?
It goes down by the amount of money you're taking out of it.
So is it dollar for dollar to
Correct.
the death benefit?
Yep.
Okay, well, that's a pretty good idea. Now, rate guarantees. Now, with life insurance, I have current company practice and I have contractual guarantees. So does this affect that if they have to change that?
Yeah, correct.
Oh, so you have to be aware that the SPWL or the SPUL may not, the numbers you're looking at are current company practice.
Correct.
The actual contractual guarantees, if they had to actually use some of that, that could actually reduce maybe your benefit because of it.
That's correct.
All right, well, that's a big heads up. How about guaranteed return to premium? I didn't use it,
Well, big deal on the non-qualified side. That's one of the benefits of the product on non-qualified. If you don't decide you don't need it, don't want to use it, you want your money back, you can get it all back.
For more information on the material presented in today's show, just click on the landing page address in the video description. And for more information on all our shows, seminars, and workshops, just follow us out on social media or visit us out on our webpage. I'm Steve Savant. We'll see you next time on Thought Leaders. And remember, keep thinking outside the box.
A solid web presence has never been more important to the success of your business. Introducing Agent Website Creator, provided by CreativeOne. Through Agent Website Creator, you can create your own personalized website and have it up and running easily with zero knowledge of programming. Choose from several designs with easy drag and drop customization. Get proven lead generation offers, professionally written articles, and helpful financial calculators. Plus, the ability to embed videos, integrate your social media, and more. Update your website anytime and show the world within minutes. The best part? It's hosted for free. To learn more about Agent Website Creator, call your CreativeOne sales team at 800-992-2642 or visit us online at creativeone.com.